Hey guys, it's Ronnie. It is Thursday, July 9th, and I am coming to you with a market recap for the last couple of days. I'm going to go over what's going on in the market with the charts, with the economy, with earnings coming up, and then also going into some of the trades that we've been looking at, potential trades as well as executed trades. And then just thinking about overall, where we are positioned right now going into the summer and looking at a little bit of a macro view um, of the economy right now as well, and kind of does that play into stocks or not, and if not, what can we do to position ourselves well in this market right now in a very crazy environment. So, if you're ready for it and you're interested in learning more, stick with me. We're going to start with the S&P 500. All right. So, on your screen is the 6-month daily S&P 500 chart, and you can see we are still under this descending trend line here from the all-time highs to the June 8th high. We're still kind of just right at it. Nothing has changed in the outlook with respect to if it stays below this trend line. We're looking for lower prices in this market, and it has crossed below this shorter term trend line from the March lows. So we're still under that, but more importantly, we're still under this descending trend line here. So and the last couple of days have been really interesting. So I'm going to go ahead and put it on an intraday chart so we can see. This is the last couple of days. Now that the top that we talked about for the past few days here, where we closed the gap made by that island reversal several weeks ago. This was the gap fill of that island reversal, and this here is the descending trend line that we've been talking about that we stayed under. Here's kind of the high point just a couple of days ago of that move up to that gap fill and then close to the descending trend line. Now we've come down from that, but you can see over the past couple of days after this day where it kind of, you can see how the market just declined into the close even. It gapped up the next day, came down pretty hard in the morning once I think that on the news that the Federal Reserve was going to be pulling some of its bond buying. And then just, meandered most of the day, and then at the end of the day, rallied pretty hard. Same thing with today, very similar, meaning, in the morning, we, had a really strong down move, mostly on news that some of the political nature about Donald Trump and tax returns. So the potential of a Democrat getting into the White House spooked the market, I guess. And it went down to back right down to this other trend line that we'll expand out to the daily again and talk about. But it hit this trend line and then just popped up hard the rest of the day. Now you can see a little weakness at the very end of the day, or a little confusion anyway, um, in the market. These last three 15-minute bars, started to um, go down again towards after 2 o'clock, and then just made a bottoming tail hammer and pushed up really hard, and then kind of slowly came down towards the end of the day to settle down here at the 3150-ish area. So, but each of these days it has come down, and then people are buying it right back up. I mean, I don't know if it's uh, bigger traders or what, but definitely there is a theme that this market is being bought up anytime it has an opportunity to make a little bit of a move lower. Nobody wants this market to go lower, it seems like. So the big guys are doing whatever they can to keep it up, buying the dip. So here we are. We're still in this range, but you can see just by even looking at this intraday, these 5-day intraday, you can see it kind of has made like a little bit of a rounded top, meaning like the highs are lower. This high's a little higher, but it's not as high as the last one. So we're looking for, again, for it to stay underneath um, stay underneath this trend line. And the trend line that I was talking about that it hit today is this shorter term trend line from the May low to the June low. So this line right here, this shorter term one. So it actually tapped it and bounced hard off of that. So that's something that we need to look at and carry forward. I mean, this move today was a lot weaker. Like the market was a lot weaker today than it was yesterday, but it has pierced this again. So let's see if it goes back down below that and continues lower, or what the situation is. I am still short the S&P 500. Sold some of my position today. Um, I got short intraday a couple of days ago in this area, and I'm still short. So it's been a really like wild couple of days. As you can see, my position has been profitable most of the time, but today in the morning, especially, it was really pushing it here because you can see it was very close to my stop, which is this gap right here, or this high around 31.84. So I was able to sell some of my position, not at the very low, but like right around this bar, this green bar right here, this 11 o'clock bar, as it crossed back above this level of congestion. You can see here it was starting to get some support at this trend line, and then two green bars. And as soon as it crossed back over this first green bar over here at 10 o'clock, I sold most of my S&P 500 short position. So still short some S&P 500. I've left a couple of positions on as runners. Um, all right. So that's the S&P 500. Now I'll just compare that to the Russell 2000 and the Nasdaq. So let's just take a look. The Russell 2000 will say very similar to the S&P, right? So this is the small cap index. This is very similar in charting, at least charting terms, to the S&P. It has a higher high an all-time high back in January, February. It's got a lower high in June, and it's kind of underneath that right now. So same proposition there with the Russell 2000. Now the Nasdaq, I'll use the Qs to demonstrate this, is just at an incredible all-time high. This thing is just continuing to grind higher into some sort of bubble, I guess, because this is tech heavy, right? Lots of tech companies, but really it's focused on and it's heavy on a few names. Names like Apple, names like Apple, Amazon. Look, Apple hit an all-time high today. Amazon, I believe, hit an all-time high today as well, and it was just cranking. I mean, look at this stock. It is insane right now. It's up 3.33% today, and closing at the highs. Just nuts. So Apple, Amazon, and Netflix. Insane. All-time high in Netflix today. Looks like it's going to go higher. Google is tapping its, I think, all-time high right now, 1530. It's right there. These are just Facebook even. I mean, Facebook is pushing up again to that area. So, it's just a very strong. The index is just very heavily tech, and the tech stocks are very strong right now, especially these few. I mean, it's very concentrated in a few stocks, honestly. And so, what happens when those stocks finally decide to pull back, or people finally decide to take profits? I mean, that could cause the market to collapse. So we're really looking at, we're not looking at some of those stocks that are being just piled into by hedge funds, by pension funds, by 401ks. It's those stocks are just they're very very common, and everybody's getting in them. So we're not looking to trade them. We did have a trade in Facebook that we'll go over because of a potential crack, I guess, in the armor of the tech names, of the FANG names. So it worked out okay, but again, it's back up. So we'll talk about all that. But just overall, the market very very strong with the tech names. Um, let's move on, I guess, to the couple of trades that that we took. So we'll just go into the XLF first, which is the financials. So you can see here on the daily chart, this is the XLF daily. It is below. I did buy one piece. I bought a small piece a couple of days back as it crossed below this shorter term trend line here from March on March, and then touched in May, and then we're, we're we were in the position a couple of days ago. Um, Only a small position because it had just started the move down, and you can see yesterday if we zoom in, I was looking for it to get to below this red bar here to buy more. Now today it actually did pierce below this line, and I did buy a couple more puts on it, and I didn't just straight short it at that point because it started pulling back up, and the market started pulling back up. But I did get a couple more XLF put options around this 2260 area. So and it has retraced a little bit, but the rest of the market did as well, and it is weaker than the rest of the market, as you can see from the chart. So I'm looking for some continued weakness in XLF. The financial stocks are. It's really not an environment for them to succeed at this moment. I mean, we've got some cutting dividends. Earnings, I'm sure, are going to be pretty horrendous considering the interest rates are so low, number one. But more than that, there are, I'm sure, commercial and residential um, mortgage holders that are going to be defaulting on their mortgages or not being able to pay their mortgages with COVID-19 stresses right now. So I don't anticipate this being a great quarter for the banks. I think this whole COVID-19 and economic shutdown is very stressful on that industry. So until we get some good news on that front, I think banks are going to struggle for a little bit. So I am short the XLF, and I'm looking to hold it through the summer. Honestly, I mean, maybe I'll get in and out of trades based on action in the market and potential volatility. But in reality, I am looking at every opportunity I can get to short more XLF or to get a position in XLF to the short side based on the technicals as well, of course. So financials still doing okay. And we'll talk about INDA. So INDA, I got back into on the short side at the 200-day moving average the other day, 2 days ago. And it's actually kind of hard to see on this chart. I'm going to go ahead back to the black um, chart so you guys can see on the INDA. So here's INDA, and what we had talked about a few days ago was this 200 moving average right here, and this is actually where I shorted more INDA. Now, it's pretty close to my stop at this point. I mean, it got pretty close to my stop today, but I'm still short some. Yesterday, I was able to get out of a little bit of the position because it moved so much. Like if you look at the intraday on INDA, you can see the gap down. So I bought it this day, bought some puts in INDA on Tuesday, and then you see the gap down on Wednesday, and this is where I was actually able to sell some as it was crossing back above the first 5 minute high in that particular ETF. So I did sell some here at the 3061 ish area, and which was good because I took some profits off the table. It did rip a little bit higher, and today it wasn't looking so hot first thing in the morning. It gapped up pretty hard, but it did come back down to earth a little bit here, back down to that 3061 area, and then it has gone up with the rest of the market. But I'm still holding that second part of my position, so it's about a little bit less than half of the position that I had originally. So because of this big gap down, I wanted to take profits, which is one thing when you're in a trade, especially an options trade. If it moves very strongly in your favor on the first day, if you're making 20, 30, 40%, 50% profit in those options on the first day, you want to take some of that off the table because in reality, it's an option position. If it retraces, even and goes back to where it was, that option's not going to be as valuable because time has passed. Number one, plus the volatility. Um, with it moving up and then moving back down, it's just it's not going to be the same price, honestly. So where it was earlier today, I was still it was actually not as great as uh, the value was not as good as it was yesterday when I got out of the position, even though it was at the same price in the stock. And this is why when you're trading options, it's usually you know if depending on your style and what you'd like to accomplish, it's usually a swing trade of a couple of days or weeks, depending on what you're looking at. But big gap down definitely takes some profits. So I'm still in INDA, and I mean, even though it did what the stock market did today, it went down and then retraced itself towards the second half of the day. It still is below the 200-day moving average, so we're still staying in INDA for now. And then I'll talk about Facebook and where we are there. Now, you can see I actually sold Facebook, got short Facebook rather up here at this arrow on Tuesday. And you see, we were talking about in the aftermarket Tuesday how it actually went down even further. So I was really looking to get out of it on Wednesday, or at least a lot of it on Wednesday. But in the overnight session, it went down quite a bit, but retraced a lot of that and opened up really strong on Wednesday. And then, so I was a little bit, it didn't do what I wanted it to do, and so it's not the best feeling, especially when it's like ripping off the open. You can see this huge 15-minute bar here. So as soon as it made this tail, though, you can see it had the big tail to the upside. I was getting ready to go ahead and look for an opportunity to sell my position, and I did get out of Facebook down here as it was hitting this 200 moving average on the 5-minute chart. So in this range, and I'll go ahead and mark it off for you. This is where I actually got out of Facebook as it crossed back above the 200 moving average and then above this first green bar down here. So I am out of Facebook. My stop was up here. It never hit my stop on this first 5-minute bar here, but it did give me a little bit um, of a scare that it was going to because of the strong move, the first 5-minute and 15-minute bars. This is a 15-minute, sorry, but even if you look at the 5-minute, it's quite strong. Facebook has since ripped back up. I'm going to go ahead and delete this prior stop because I'm not don't need that anymore, or this arrow. So it has actually ripped back up. It did not make it back up to this trend line yet. And you can see today, it again went up, tried to get up there and fell hard, but has since retraced. So we're still kind of, if you look at it on the daily chart, we're still underneath this trend line. And so Facebook, even though I'm out of my position, because the rest of the Nasdaq is so strong, I'm sure this is some of these moves are as a result of that. But fundamentally, again, I'll reiterate it, my case on Facebook, with all these sponsors or these advertisers pulling out of Facebook right now because of their stance on, basically monitoring their platform. Um, I really think it's going to struggle a little bit, at least with their ad revenue being cut because these guys are pulling out of advertising for the next few months. So let's see. I'm looking for it to stay underneath this top trend line right here. And if I get an opportunity to short it, another opportunity to short it, if it in the next days, if it doesn't get above this and starts to curl back down, I may take an opportunity to short it again. But for now, not in Facebook anymore. You can see it does have like a hammer, like a kind of bottoming tail. It's not a bottoming tail really because it's not at a pivot here, but it is it did retrace quite a bit today. So that could mean higher prices, at least temporarily or short term. So I would like it to get below this area right here before I short it again. I mean, and that's I play it safe that way. So like this little area right here, I'd like it to get below that. If it can get below that, I think lower prices are ahead. But and then I've got some targets with a 50 moving average, 20 moving average, this pivot. But if it gets up to that trend line and just can't push above it, I would definitely look to short it um, using call spreads. So I think what I'll do is if it gets up here and doesn't cross, I'm going to go ahead and sell some call spreads. Maybe up on the 255 or 260 area. Like so, that's selling a call and buying a further out call in order to spread out your risk. Basically, you don't want to just sell calls. It's very risky and it takes a lot of capital. So I would be, buying a cheaper call to protect myself. So really, my maximum profit is the difference between those two calls. So I'll probably sell some call spreads as it comes up to this trend line if it doesn't cross it. If it does, all bets are off there. Um, and then I'll wait for it to get below this congestion, and then I'll short it. In addition to having those calls, so I'll use this opportunity so I don't miss out on this whole move from this trend line down here. But if it does get down below this congestion, I'll look to short the stock um, or even buy some puts, short term puts. And that's Facebook for you. So those are the some of the positions um, that I got in and out of this week. Also, just to go over some of the from a macro point of view, I am long gold, I'm long silver, and I'm long bonds. So we'll go over those three. And I'm looking at getting long commodities, and I'll tell you why. It's because again, the U.S. dollar is weak, and I'll show you. We'll start with the UUP, which is the U.S. dollar ETF. So you can see here it's got this really big where it spiked up back in March. It consolidated a bit, then has come down, and it's tried to make a push up, and it is rolling back over now. And so, if it gets below this pivot of like 25.94, 25.90 area, lower prices could come, and I've got a 50% retracement probably on a longer term time frame. So we'll see what that is here as well to kind of see. Yeah. So it's down from the and actually, I need to change this. Let's go ahead and put it all the way up to this spike here. So it actually gives you a better and clearer view that this U.S. dollar is kind of right at that 50-day, right? 50% moving average, 50% retracement on the Fibonacci from the prior low to the more recent high. So you've got this, this could be a level of support, but if it gets below that, I'll be looking for it to get back down to either the 61.8 or even further down to this spike, right? 24.76 area. So that's what I'm looking at in the dollar. And dollar, as the dollar weakens, and commodity prices are going up because of demand and maybe lack of supply, and even just inflation on some things like um, corn, potentially soybeans. I personally was got long wheat as well, and so we'll go over that. I just got long wheat. Actually, I think it was last week via this ETF, and I just haven't been able to discuss it because the videos are just really long. So I want to focus on certain things. But since commodities are kind of a new trade for me, I want to go ahead and at least touch on it today. So let's talk about commodities first, then we'll get into the precious metals and bonds, which is something that we touch on every time because I am still long all of that. So this is wheat. This is the wheat ETF, and I personally am. I know it's a commodity, and it definitely goes along with the rest of the commodity space, being that those prices are increasing at this time. Prices for commodities. And I was able to get into wheat down just back. I actually got into it back here in this area, and then I added some more to my position around the end of June in my retirement account. So it went actually lower after I bought it first, and with this retracement quickly popping back up through um, this pivot, I was able to just go ahead and buy some more. And this move right here was really good. It's a pretty cheap ETF, so you can buy it directly. You don't have to use options or anything. So I bought it directly, not too much, very small position, 1% position, in my retirement account. So I'm looking for higher prices in wheat. I mean, let's just take a look at this commodity. I mean, I know this may seem like a silly thing, but personally, I know commodities are, um, the pricing on commodities is is going up, right? The cost of things is increasing. You can see that at the grocery store even. I can't even buy uh I can hardly find flour at the grocery store. I mean, it's getting a little better now, but it's very difficult to find flour. It's very difficult to find any kind of like basic essentials for decent prices. Things are increasing in price, even just like corn products and things of that nature. So I see things, the pricing of groceries even increasing, and so the there has to be a reason for that, and the price of commodities increasing is I think that reason. Um, and obviously the U.S. dollar is not as strong. So that would also increase the cost of commodities. If we purchase a commodity from somebody, it's going to cost us more if our dollar is weak, right? Than it was if it was strong. So this is a monthly. I think it's a 20-year monthly chart of wheat. You can see it's just very. It's been very. Wheat's been getting cheaper and cheaper. Um, and now in 2020, it's kind of found a base here. You can see it made a low at 483. It's gotten a higher low from that. It's never gone back down to 483, even though it did kind of dip earlier, like I showed you earlier in this past month. And so I'm looking for continued upward pricing on wheat. I don't think it's going to get up here or anything, but potentially even just as it pushes up to this $6 level. Here's kind of the long-term 20-year 50 moving average. If it crosses above this 20 moving average, I mean, it has the potential to get up there, even if it's like a spike. So I'm retaining the small position I have in wheat, um, as a play on commodities. I don't have corn or soybeans yet, but you can look right here. It's almost the same chart. This is the monthly again. Corn is has got three had a double bottom down here at 1150 area, and is pushing up from there. Um, and then again, let's look at soybeans. Soybeans, same thing. So I mean, it's a potential with the U.S. dollar decreasing. It has the potential. Um, this is UUP on a longer term as well, very choppy. But if it comes down to some of these pivots down here, you could see a further increase in commodity prices. Um, all right, so let's move from commodities quickly, and I'll take it off the monthly chart here. Let's move to gold. We'll use the futures for gold. Still doing great. I mean, yes, it's come down a little bit since, since actually after hours. It looks like this move has happened because it was pretty it was pretty strong the past few days. You can see these green bars going up. I mean, we have a little doji right here, but mostly green bars. And I'm looking again, targets on gold for it to get up to this 1886, 1900 area, which is the top, uh, the top of this channel that it's in right now. Over time, I mean, again, it can be volatile with the market moves the way they are. But let's check the volatility on gold, which is GVX. And gold volatility is actually pretty low down here in the 20s. So unless this increases, unless gold volatility gets up above 29.30, um, probably 30, I guess. I'm not looking for too much volatility in gold. So, I will look for higher prices as this comes down. And also with the currency going, I mean, the U.S. dollar decreasing in value, and in general weakness in the economy, I anticipate gold having being a good store of value, for the medium term. Let's take a look at silver as well. We talked about silver pushing up above this line. Let's put it on the daily because I did buy silver yesterday and day before yesterday. I bought a tiny bit day before yesterday as it bounced off of this line right here, this trend line, which is kind of a longer term from the top from the medium term top here this year. Um, this lower low, this lower high here back in February, and as it crossed through, it like looked above and failed it over here in June. But as it kind of based, made a little cup pattern, and as it spiked down to that level day before yesterday, and recovered very quickly, I was able to buy a little bit of silver, and then yesterday I bought some as it crossed through this 1891 area, which is what I've been talking about for several weeks now. I mean, it still has, it's found a little bit of a resistance up here at this trend line, but as long as it can stay above um, this descending trend line right here, as long as it can stay above that, I'll be looking to continue to find more opportunities to get long silver. Now, this trend line is from back in 2016, so from a high back in 2016. So I'm really looking for it to push above this trend line and then ultimately above this 1975 area. So looking for further highs in silver. It has finally pushed up above. It's like knocking on the door a couple of times over the past several months of this 1890 area. So it finally got above that, which was great news for an opportunity to buy silver. So it has been volatile. I mean, you see, it's actually shown some volatility today as the stock market went down. It also went down, but silver tends to do that. It doesn't go exactly with gold or exactly against the dollar. Okay, and lastly, we'll talk about bonds. So bonds had a stellar day today. He was able to sell some of my bonds position. I was in a small bond position and was able to sell that position today. I mean, it may go higher, but just looking at all this overhead supply here, you've got this whole area of congestion um, that it could find some resistance in this area. I mean, it could blow right through it. I don't know, but at the moment, I think this may be a little bit of resistance for bonds. I mean, even if it goes up a little higher, it may find some resistance up here. But it had a really excellent day today, so I was able to take a little profit in bonds. I'm looking to get, of course, always looking to get back into bonds at a good price. I don't see, I mean, interest rates aren't going to be increasing anytime soon, as far as I know. As far as the Fed has said, they're keeping interest rates low for the foreseeable future. So any dip, in this, any dip in bonds is really buyable. So looking for more of that in bonds. And actually, if you have an opportunity to buy bonds, you can use a few different methods. You've got the TLT, which is an ETF, um, you know, uh, very easily accessible, high volume, very good trading platform or method to trade the bonds with. You can also use shorter term bonds like SHY, ZROZ. Uh, you can see the big moves in those as well. Um, those are a couple of other ways to trade the bonds. So just putting it out there so you can take a look for yourselves. And that is all I have for today. So, you know, if you have a chance, take a look at some of these unique opportunities as we're in an economic situation right now, which it could be driving the price of the U.S. dollar further lower and the price of commodities up, as well as the price of gold and bonds um, up as well. So take your time, do the research, look for opportunities to buy those, and protect your portfolio because really this market could crash at any time. The way that this bubble is being built into this market by the Fed, helicopter money, as well as by people just propping up these few stocks that are just continue to rip this market higher. So be careful out there. Happy trading. If you like this video, you want to subscribe to my page. I will be putting out a video at least once a week, if not more often, giving you tips on swing trading and day trading, as well as kind of a macro view of what's going on in the markets. And it really, it's really just my way of talking through trades and talking through the macro with you all, and hopefully some of it helps in your trading. And with that, have a great night and happy trading. And thanks and take care, guys.